Ladies and gentlemen, good day and welcome to Q1 FY23 results conference call of Prudent Corporate Advisory Service Limited, hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is... I now hand the conference over to Mr. Rohan Mandora from Equirus Securities. Thank you, and over to you, sir.
Thank you, Niro. Good afternoon, everyone. Welcome to the Q1 FY23 earnings call of Prudent Corporate Advisory Services Limited to discuss the quarterly performance. To address queries, we have with us from the management, Mr. Sanjay Shah, Chairman and MD, Mr. Sirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Whole-Time Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh, Investor Relations. We will begin with a brief management commentary followed by question and answers. Thank you, and over to you, Mr. Sanjay Shah.
Thank you, Rohan, and good afternoon to everybody. I would like to welcome all of you to the earnings call of Prudent Corporate Advisory Services Limited for the first quarter of FY22-23. So I want to thank everyone for sparing your valuable time to join us today. I hope all of you must have looked at the presentation which has been uploaded by us on the exchange platform. And please, you are requested to keep that presentation handy because during the discussion we might give a lot of references to the presentation which has already been provided. So before I start the presentation and I refer you to the various slides, I would just like to brief you about a couple of important points which are related to the performance parameters of Prudent as an organization. So broadly, if I wanted to tell you, there are 4 business parameters on which we always look at our business, specifically the retail wealth management business and more specifically mutual fund distribution. So the first major pillar of our business has been the net sales for the equity assets. And historically, we have always told that our net sales is more or less equivalent to our SIP book which we have. And hence, we gave the guidance of about 5,000 crore of expected net sales in FY22-23. So if you look at the net sales number of first 3 months, which is April, May, June, we did a net sales of 1,475 crore, which is in line with our target or the guidance. Second important parameter for us is the partner addition in our business because we are purely a retail-centric B2B2C platform where empanelment of new retail distributors on Prudent platform is very, very critical. And if you look at the numbers, we moved from 23,763 RN holders working with us in March to 24,853 in June. So that talks about addition of almost 1,089 new RN holders on our kitty, which is a very, very strong numbers for us. Third very important point is the SIP book, which is, I think, entire industry is driven by that. Prudent is also driven by that. And actually, SIP gives a lot of visibility of our business going forward. And if you look at this quarter, we increased our SIP book, which was 418 crore in March, to 431 crore in June, and when I'm talking to you now, it has already reached 457 crore. So I think that shows that our number on the SIP side is growing consistently. And fourth parameter or the pillar of our business has been the mark-to-market impact on the AUM, which is normally not in our hand. And all of you are aware that April, May, June has been little bit subdued as far as market sentiments are concerned. So there was a 8% minus impact on our equity AUM because of mark-to-market. Our most heartening point is while I'm talking to you, April, May, June has been negative by 8% due to mark-to-market. But July alone, I think the AUM has recovered by more than 9%. And when I'm talking today, I think our AUM is more than 51,000 crore. So these are 4 important points which are driving our business. So I just thought I'll brief you about that. Now, with this backdrop, I'll take you to straight away the slide number 30 and 31 of the presentation which has been provided. So if you look at the slide number 30 of the presentation, it talks about our closing AUM, which was Year on year, it has gone up by 37%. So it was 34,257 in June 2021, has now moved to 6,859. So it is a positive growth of 37%. However, sequentially it is down by 5%, which was our March ended at 49,473 crore, while June ended at 46,000 crore, 849 crore, which I told you the reason, one of the major reasons for that fall is not the net sales, but the mark-to-market impact of 8%. So if you see that slide number 31, I think this is very important, which explains the movement in our AUM. So if you look at last 12 months, our net sales was 6,155 crore, which was almost 20% of our June 21 opening AUM. Last year we acquired Carvi assets, which has positive impact. So if you look at last 12 months, the entire AUM had the mark-to-market impact of 1% for 12 months ending June 22, and 3 months ending June 22 mark-to-market impact is 8%. And I already explained that the current quarter has been reasonably, even the July has been reasonably good for us. So that was about the slide number 30 and 31. If you look at slide number 32, probably it's talking about the improvement in our market share. So I just wanted to say that despite there being a lot of noise around fintech players and everything, if you look at our equity AUM share has been steadily growing, and it has improved by 87 basis points from 1.93% to 2.30% in June 22. Our monthly SIP flow also has been very, very robust. As I explained, it is now 431 crore compared to 270 crore a year ago. So if you look at the growth in SIP book is almost 60%. We moved from 230 crore to 431 crore in last 1 year, which shows a very strong granularity of our business. And if you annualize 431 crore by 12, it shows you an annual input value of 5,171 crore, which is almost about 10.5-11% of our current AUM. So that basically gives us a strong growth leeway. SIP mobilized during the quarter was at the historic high, so we mobilized almost 1,274 crore through SIP. And another important point is whatever the gross sales which we did in the quarter, every second rupee came because of SIP. So SIP is a very, very strong force for us in case of a lean phase or the consolidation phase of the market, and that's the reason I think we could be able to sustain our momentum. So that was mainly about the SIP. I would love to take you to slide number 33, which talks about our insurance business. So we would like to emphasize on our emerging segment, which is insurance. It now forms almost 8% of our total revenue. This vertical grew by almost 24% year on year. 2/3 of the revenue from this vertical comes from life insurance, and the balance comes from general insurance. Our point of sales personnel network, which is a strong 6,800 people, and we are relying on this channel to bring scale to this business. Sequentially, insurance numbers was down by 41%. So I just wanted to briefly explain you about the insurance as a segment. So I can tell you about Prudent as an organization. We analyzed last 4-5 years data, and if you look at full year's revenue in case of insurance business, first quarter normally contributes 15 to 17% of the revenue. Then after another 2 quarters, which is Q2 and Q3, contribute 50%, and last quarter is always significantly better, which is about almost 35%. And that's the reason normally Q1 of the current year is lower than Q4 of the previous year. However, if I consider the growth of insurance compared to last year, it is positive by 25%. If I compare it with the last quarter, it is negative by 41%. But we are very, very confident that insurance we will be able to surpass our target. If I just give an indication, the business of July alone is better than April, May, June combined. So that shows that there is a strong visibility on the insurance side also. So I'll just take you now to the slide number 34, which is basically talking about the consolidated financials. So if you look at the financials, our total revenue has grown by 43% year on year, led by strong growth in mutual fund business. Operating profit has grown by 54%, mainly because of higher revenue, and the advantage operating leverage has been falling in our side. And that's the reason our operating margin has improved by 1.8%. Our profit after tax has grown has grown a little bit slower than the operating margin, and it has grown by 25%, mainly because, as you all are aware, last year in the month of November, we acquired Karvi assets, and for that we paid 151 crore. So there are two major impacts because of Karvi assets has happened. One is we require to amortize that 151 crore over plus 10 years, and that 15 crore every quarter, because of 1/4 of that will come as a amortization cost in our balance sheet, which is a non-cash item. And second is because the 151 crore has been utilized for acquiring Karvi, so the treasury income has just vanished from the balance sheet. So these are the two impacts. These two things has a significant impact on the bottom line, which is below EBITDA line. So in spite of that, if you look at our return on equity has been upward of 30%, which has been very, very healthy. So I think this is all about the consolidated numbers. I think the individual number has also been provided. But before I conclude the entire presentation, I would just like to highlight a couple of important points. So I think first important point I just wanted to highlight that we are in a business where we generate significant cash, and we are able to utilize this cash. We utilized this cash for acquiring Karvi assets last year. Same way, very recently on 27th of July, we signed a term sheet for acquiring the mutual fund distribution assets of iFast India Private Limited for the mutual fund distribution business in the country. It's a term sheet which has been signed. Exact clarity of how much assets which will come to our core will come to know only in probably next 1.5 to 2 months time, because a lot of due diligence, a lot of process has to be followed. So that's number one. Number two, I wanted to highlight about our mutual fund distribution network. So because of the strong value proposition which we have been providing to our distributors, it is leading to more and more partners joining our network. As on 31st March, almost 20% of countries IFA were empaneled with us, and mutual fund distributors are the backbone of our journey, and we are aggressively focused in increasing this network. We are of the view that AMFI has very recently came out with a campaign called Mutual Distribution Shuru Kare. So I think that campaign itself will create a lot of visibility of mutual fund distribution business as a profession, and people will start joining this platform or probably this industry, and we feel we are going to be the direct beneficiary of increasing number of distributors joining this industry. So that was the number two I wanted to say. And finally, I just wanted to say something on the growth outlook. So we are opening the month of July with an AUM of 48,000 crore, which is 21% higher than last year's full year average. So even though there was a mark-to-market fall of 8%, still at 48,000, we were higher by 21% than full year average. And over and above that, I think July has been a very, very strong month for us. Our annualized SIP book, which is close to 5,000 crore, is 10 to 11% of our opening AUM. So these are two pillars I am just saying that we are running our book at a 21% higher AUM. The SIP book, which is aiding to our growth. Almost 45% of our distributors have joined Prudent bandwagon in last 2 years, and we feel that they will become very, very mature and seasoned over a period of time, which will add significantly to our growth potential. So these are three important parameters. And last but not least, I think I always believe we are into a business which is a strong cash generating machine. And because we have shown our capacity to do acquisition significantly in a better way by acquiring Karvi, by able to sign the term sheet for iFast, I believe that more and more doors might open for us, and the cash generating capacity will help us to do the inorganic acquisitions also. However, we feel that organic growth itself is very, very strong. So probably we believe that all these leaves us with a good growth leverage going ahead. So with this, I just end the presentation and the discussions, and I'll keep the floor open for Q&A. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Prateek from Nippon India Mutual Fund. Please go ahead.
Yeah. Hi, Sanjay bhai. Sir, one small clarification to begin with. When you say gross SIP inflow, how much is the difference between gross and net, if at all?
So the SIP inflow, which I was talking about, 1,274 crore for the quarter, we collected 1,274 crore by way of SIP in the quarter. When you are talking about so I'm saying that my SIP book has improved from 418 crore to 431 crore in June, and that's the net growth. So I'm not talking. So I think Series will be able to tell you how much new SIP which we have got in the quarter and how much has probably. So there are two things you look at. Whenever the SIP comes, it could be either because somebody's SIP has matured and he's opening the new SIP, or he might have discontinued. So normally you look at the new SIP versus closure ratio, and I think seriously will be clear.
Yeah. So basically, if you look at the numbers what Sanjay has spoken about, it's a net addition in SIP. But your question was how much was the gross and how much is the net. Last 4 months, if I talk about, almost we have added 64 crore of gross SIP versus that the net addition is 35 crore. So gross addition of SIP is 64 crore, maturity, termination and everything, you can say around 29 crore. So net addition is 35 crore.
But just to take this forward, when you say 431 crores is your monthly SIP, this is what you will collect every month? Is that a correct understanding? And when I say collect, it is not hitting the bank account, but actually getting the money from the client. So that is my question. One would be hitting the bank accounts or sending a natch or a request, and the other is actually collection, right? So
there are two parts. Unlike the industry, wherein the difference between SIP numbers reported and the money hitting in the bank account, there is a huge variation. What we follow is that if consecutively 3 installments are not coming, we terminate the SIPs in our system. So that is why when we say that what is our SIP number and the number which is recovered from the bank account, almost that number is similar. Because as we say that every 3 months the installment not coming, we terminate the SIP in our system, unlike the industry.
Perfect. And just if you can give us a trend, generally, what is your termination ratio in the sense out of this 431 which you are collecting? How much is it, which in your view, is it a very minuscule number which gets terminated and mostly there is a high repeat rate of this 431 sustaining? That is a fair understanding, sir?
So basically the numbers what we are talking about is the live number after the termination number. If you look at the historical number of the industry versus Prudent, I think every year our number, our ratio, the net versus gross number is always better than the industry. So that says that our termination is far lower than the industry's termination number. If I give you the exact number for this financial year, as I said that 64 crore was the gross SIP and 35 crore is the net SIP. So almost 29 crore rupee SIP either got matured or some of them I think also might have terminated. So this also includes the maturities, and this also includes the termination. This also includes the missed SIP installment, what I spoke to you, 3 consecutive installments. So if you look at the net ratio in this financial year, I think you can say 60% of our SIPs in this financial year is net. 64 and 35, as I said the number.
Got it. And sir, just from my understanding, we've seen a sharp rise in employee cost. Obviously, I'm assuming this is because of Karvi not being in the base on a YOY basis. That is a fair understanding?
So Prateek, I think the employee cost has gone up by 24% YOY. So there is one important parameter would be we have increased our employee count in last 1 year. And the 12 to 13% is the natural, the increment which has came. And second thing is probably we made a little bit higher provisioning of the variable cost, assuming the higher incentive, because last year, if you look at last quarter, we had some higher provisioning required. Finally, the incentive cost was higher in January, February, March of last year. So keeping that thing in mind, we increased a little bit higher provisioning for the current year. That must be so overall the employee cost is in line with the growth. 11 to 12% is the inflation, and probably opening to closing, there must be 5-6% increase in the number of headcounts.
So roughly, I think you can attribute 50% of the cost escalation to add in the manpower, and almost 50% is the escalation of the cost.
Okay. Got it. And lastly,
I think 80-90 manpower in last 1 year.
Okay. And lastly, sir, just on the new transaction where you have signed the term sheet, Is that again a B2B2C business which you would be acquiring?
So basically, yeah, I think if you look at the iFast business, they are also into the B2B2C business. I think they're almost 97-98% of their AUM is B2B2C, the way we are having. So exactly the portfolio of iFast and portfolio of Prudent is exactly the similar. So that is the best match for us.
Okay. And sir, is there a branch overlap also over here, which means there could be synergy benefits coming out of costs?
So basically, we are only acquiring the mutual fund AUM. We are not acquiring any manpower or anything. So all the, I think, iFast presence across the country was very, very limited. So all the places where iFast was present, our branch is already there. So we need not to open any branch. We need not to add any manpower to acquire the iFast AUM. It's simply the AUM acquisition without adding a single rupee cost.
Okay. And the MFDs come with that, right?
Yeah. So iFast has got a good amount of MFD. There will be some overlap between Prudent and iFast because many of the iFast distributors might have joined Prudent earlier also. But still there will be a few hundreds, I would say at least, who are not working with Prudent. So obviously, I think that is an addition for Prudent.
Got it. And just, sir, sorry, just from a clarification perspective, on slide 18, is it that you have individual insurance POS also?
Slide 18 is talking about the...
Yeah. Basically, if you talk about this particular slide, out of our total insurance POS of 6,800, almost 3,300 is the overlap with the ARN holders. So now what happens that out of our ARN holders, almost 3,300 guys are converted into the POS. As you would be aware that as per IRDA guideline, the person who is already holding the insurance license cannot become the POS. So those ARN holders who are already working with Prudent and themselves are the insurance license holder, they cannot take the POS in their name with Prudent or Gennex. In those particular cases, most of the time they take the POS code in their family's name, the wife or the family member. So normally we don't go out and acquire the POS. It is only the Prudent system distributors which are an approach. But the ARN holder himself is not able to take the POS license because he is having the IRDA license in his own name. So the remaining guys would be the family member of the ARN holders.
Perfect. Really helpful. And last question, sir, how should I think about mobilizing lump sum inflows? I think this quarter also, if I were to see, there has been some mobilization of lump sum flows apart from SIP. Any thoughts? How should we think about that?
So basically, if you look at those of the industry in first quarter was lesser compared to what it used to be in the Q4 of 21-22. But at the same time, the redemptions are far lower in the industry, and so is the Prudent. So if you look at the net sales to the gross sales ratio for this quarter was superior compared to what it used to be in the last year. One reason you can attribute to the lower gross flows, maybe one is the market sentiment or the lower returns in the last 1 or 2 years. But some part also you can attribute to the no NFOs during the last quarter. So these two reasons I would say that you can attribute to the lower flows on the gross sales side. But having said that, the net sales on a monthly run rate basis, we are superior to the last year's average net sales.
Fantastic, sir. Best wishes for the future. Thank you.
Thank you, Pratik. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ronak Chheda from Varga Capital. Please go ahead.
Hello. Am I audible, sir?
Yeah.
Yes, sir, you are.
Sir, yeah. I have a basic question on the industry itself. We've seen the listed AMCs talk about the commissions in the industry going higher in the last 2 years. Sir, what in your sense is the status of the industry itself? Is it higher first? A, and if yes, then where this number should settle at?
So you are saying that if I understand your question, you are trying to say that the brokerage expenditures or commission payout of asset management company has been increasing. That is the question. If I understood that, if you look at entire industry has moved to a all trail model from April 2019, and before that the model was you pay a higher upfront and a lower trail over a period of time. So from a higher trail, lower. So if you look at all the business before 1 April 2019, AMC were having the lower trail component, and whenever this business is getting moved from a or getting churned, they are entering into a higher trail, and that's the reason I think this entire impact is happening on the AMC side, where they are not taking any balance sheet hit now. Previously, upfront used to go out of their pocket, so balance sheet is not there, and now it's only a trail, and because asset is getting churning from old assets to new assets, and that's the reason I think their commission cost is increasing. By and large, I believe, and I just looked at some data also, almost 67% of the industry asset is new post April 19, including mark to market. And so I believe that on the AMC side, maximum impact probably would have accrued to their balance sheet, and incrementally I don't see a significant impact as well. AMC is concerned, that's my view. But probably whatever is the expenditure which they have currently, I think that should sustain.
So from a pricing point of view, it's not that the commissions have gone up. It's just because of the new model, this is the impact, right? So for us, this commission which we are earning should sustain at these levels. Would that understanding be correct?
So now whatever rate they give, it's a perpetual similar trail rate. So your understanding is very, very true that whatever we are earning should, so there are two parts. One is the new business which accrue to you at a newer rate that might be higher or lower based on the current AUM and the TR of the asset management company. As far as the current book of 50,000 is concerned, which you are looking at whatever we are earning, that's in the price, and there will not be any change into that. That is number one. Number two, I think the AMC previously it was a call of 3 years total. I think now for AMC in general cost is increasing. So it's a perpetual cost for them. It's a perpetual revenue for us.
Got it, sir. And sir, my last question is that as you mentioned, because of the TR schemes, some AMCs can afford to pay higher commission and some cannot because of the scale. Sir, but in the last 2 years, we have seen some of the AMCs like Mirai, Axis have just scaled up in terms of AUM. Sir, are you seeing any recalibration of commissions from those AMCs which are anyway performing better?
So basically, if I understood your question correctly, you are saying that the AMCs which are attracting AUM, their schemes have grown higher and higher, and their commissions are now reducing. Is my understanding right? That was your question is?
The commissions were higher earlier, and I'm just asking, had that commission come down now because they are also at some 30,000 crore scales on large cap schemes, etc.?
Yeah. So obviously, as Sanjay Bhai said that the commissions are decided when we log in the new transaction. Now, whatever would be the commission when we source the business, and as you said that time the commissions were higher. So obviously on our AUM, whatever business we would have done that time, the commission rates are frozen. Now the scheme size is big, so obviously on the new business, they would have reduced their commission structure. So when we do the new transaction in the same AMC when the scheme size is higher, the new transaction will come at a lower trail, but the business which is already locked in, that still will continue the previous rate. I hope I have addressed your question.
Yes, sir. Thank you so much for clarifying. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Letio from Equirus Securities. Please go ahead.
Good evening, sir. Thank you for the opportunity. So, sir, like, despite the absence of NFOs.
Your voice is not coming clearly.
Hello?
No, still
Hello?
Sir, can I request you to speak through the handset, please?
Yeah.
Hello?
Hello? Yeah, go ahead.
Yeah. Good evening, sir. Thanks for the opportunity. So, sir, just wanted to understand on the commission side. So, despite the absence of NFOs in the last quarter, sir, like there has been a sequential increase on the distribution of MF yields. So, what would be the reasons for the same?
NFOs only don't contribute to the sequential growth on the distribution. So obviously, Prudent, so I think if anybody is assuming that because of NFOs, distributors are entering in the industry, I think that perception may be wrong. We believe that more and more people would like to enter the mutual fund industry. So the growth of MFDs will keep on growing. Second, the positioning of Prudent as a platform in the industry is becoming stronger and stronger. More and more MFDs who are currently working with the AMCs directly, they also have started feeling the importance of platform, and that is where even we are also placed in a better way. So there also we see the growth in the number of MFDs. So our growth in distribution or the MFD reach is mainly because of two. Prudent positioning for as a platform is becoming stronger and stronger, and more people are entering in the industry. So having an NFO is attracting more and more distributors. I think that perception may be wrong.
No, sir. So I wanted to understand on the yield front, or yield side. So like if we see the yields on the mutual fund distribution, so that was about 90 basis points in last quarter, and this quarter it was about 93 basis points. So wanted to understand the reasons for the same.
So basically what your point is that because of the NFOs, the gross yield increases, that is right. But I think last quarter of this financial year, or I think FY21-22, I don't think that there was any major NFO. Even if you compare YOY, April to June also, there was no major NFOs, even April to June 2022. I would say the gross increase in the yield, you may attribute to two reasons. One, of course, is the money which we collected in the, specifically I would say the NFO period of July to October, November 21. This was the time when more and more NFO were there, and I think the gross yield of this period would be higher, and that is helping us to increase our gross yield in this quarter as well. But otherwise, I don't think that any other reason you can attribute to the gross yield.
So another just wanted to highlight an important factor is that normally Jan, Feb, March is a 90-day quarter, and that one day, if you 1 day divided by 90, if you do, that is also having an impact when you annualize the yield. So that could be one of the reasons. Otherwise, it is flat. I think if you look at the yield is same in both the quarter.
Okay, sir. And so like, could you highlight the difference between the yields on the NFOs as well in comparison to the existing AUM which is existing to our business, and like how has that trend been in the last 1 year?
That depends on the mobilization or expected mobilization of the fund. So even between NFOs also, the fund which is expected to collect more money, there the gross yield is lower. At the same time, when the expected collection of the NFO is lower, the gross yield is higher. Now, obviously, you also can understand that when the NFO is going to collect more and more money, the payout to the distributor would be lower. So that is the reason I said that it is a myth that average yield of a distributor would increase drastically by mobilizing huge amount of NFOs. Because where we are getting more brokerage, the gross collection of that NFO is less. Where we get the lower commission, the collection of that NFO is higher. So obviously the weighted average yield of the NFOs is not significantly different compared to the open-ended ongoing schemes. But yes, it helps to increase the gross yield little bit, but the perception I think may not be the exactly right.
Sure, sir. Thank you, sir.
Thank you. Next question is from the line of Nidesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. 2-3 questions. So firstly, on NFO, when we get a AUM, in the first year, the yields are higher, or the whatever AUM we have originated through NFO, yields are higher on that AUM till that AUM will last in our book?
So normally we work with the perpetual trail rate with all AMCs. So our yield in the first year and the third year and the fourth year remains the same.
Even in the NFO? Even the NFO
also, yeah. So normally we always believe that we don't want to work simply looking at the first year higher yield. Of course, I think there will be many distributors in the country who would prefer the first year higher trail and then the step down trail commission. But in our business, we always believe in the perpetuality rate. So it may happen that my first year rate may be lower compared to few distributors, but we always believe in the perpetual similar rate.
Secondly, sir, you mentioned that 67% of industry AUM has now become new pricing, right? What is that percentage for us?
What is 65%? What is the 65%?
I think you mentioned that 67 or 70% of industry AUM has now come at new pricing, which is at the trail commission.
Industry, no, I was trying to understand, still is there an impact left on the AMC business? That's the question people are asking us time and again. So I looked at what is the mark to market on the industry post April 2019 and what is the gross sales of the industry post 2019. And if I sum up that, I think almost 70% or 72% of the AUM has already came to a new price. That is what I'm just trying to say. So I think there might be a lot of assets which will not churn. So incremental pain to AMC would be very, very low. However, as far as us is concerned, our pricing is already there, whatever 84 basis points or 96 basis points, that's going to remain fixed. So I don't see impact on our business. AMC, I think incremental impact would be very, very low. That is what I was trying to say.
Why for us the impact will not be there? Our entire AUM has become to new pricing, or?
So I think in our case still there is a positive impact left because Karvi की जो पूरी assets है, the entire assets is at a 65 basis point compared to our 94 basis point. So there might be positive things. Second, in our assets also there are 22% assets which are older assets where probably if the churning will happen, we might get a better rate. But I'm just trying to say that the current yield should remain as it is because incrementally you might see some churning happening on the Karvi side, some churning on our old assets, while the new business might come at a 1 or 2 basis point lower. So we assume that our yield should remain steady for next 1 year or 2 years.
Understood, sir. Thirdly, sir, on the for a MFD, what is the value proposition that we provide versus MFD tying up with the AMCs directly? What is the value proposition that we provide, and in that sense, how is the commission structure for a MFD? Is it same across both of these options, whether tying up through us or tying up directly through IMC?
So we have already given the benefits which we give to the MFDs on the screen. If you refer slide number 16, probably it will tell about our offering. Sum it up, I will say as an MFD, if I go to the AMCs directly, obviously there is a lot of time requirement to negotiate to understand the offerings of various AMCs. Any kind of service requirement, the distributor might have to reach to different AMCs. When he comes to Prudent, obviously it's a one-stop shop for all the mutual funds. In addition to that, multiple products are available in a single platform with Prudent. If the person deals with AMCs directly, obviously he will not be able to offer all other products, while in Prudent they are able to offer all the products. And most important benefit you talk about is the technology offering. We help the distributor to acquire a client, to service the client and grow the business by controlling or reducing his operating cost, which probably he might not get from the AMCs. He might have to invest in the infrastructure and all these things. So at Prudent, our value proposition is that we help him increase the productivity, we help him increase the wallet share, we help him reducing the cost, operating cost, and hence the net revenue for the distributor. So that is our value proposition. But to get more details, I would ask you to refer slide number 16.
Understood. And from a commission standpoint, he will be getting lower commission if he signs up to us versus directly to.
When any MFD joins us, I think we always say that my commission may be lower by 5-10 basis points when you compare with the industry when you deal with AMCs directly. But look at the value proposition what we offer to them. So obviously, I think our commission may be little lower compared to what they get from the AMCs directly.
And lastly, on the POSP in insurance. What I understand is PSP doesn't make money for the distributor. So definitely agents will make money, but whatever commission that you will be getting from life insurance or from insurance companies, that will be passed on to the agent. So that's how most of the other large players are scaling their business. So how are the economics for us in that business, sir?
So basically, we are not in that game of growing the business at lesser revenue. So the way we are working on the mutual fund industry or mutual fund model by maintaining our margins, a similar philosophy we also have in the insurance business, and that is the reason you would have seen that all our POSP, we are only recruiting from our set of distributors who are working in the mutual funds, either directly the ARN holders or their family members. So we are not in a game of acquiring POSP by offering the higher commission. We try to win this particular race by offering the better service and maintaining our margins. The same way we are doing in the mutual funds.
Understood. So on a unit basis, it's still on a net basis, still we are making some commission there.
Yeah. So we are making money in that business.
Okay. Thank you, sir. Thank you. That's it from my side.
Thank you. Next question is from the line of Alok Kumar from UT Asset Management. Please go ahead.
So congrats for the result. Just wanted to know the MF AUM that we will acquire from iFast.
Yeah. How much AUM we will acquire? That is the question?
Yeah.
No, I think that's the reason I just said at the beginning that as a process, what iFast has done is that they have kept the window open for their current mutual fund distributors, whether they wanted to go with Prudent or not. And if somebody doesn't want to go with Prudent, they are going to issue NOC to those people to work independently, number one. Once that window is over, whoever has agreed to come to the Prudent, the statutorily, all the investors saying that iFast is transferring their assets to Prudent's ARN 9992, do you want to go or not? And so that entire process would be, I assume, about more than a month, about 45 days. And after 45 days, only we'll be able to come to know that what is finally came to our court. So I think it's going to be a speculative for us to give you any amount currently.
Thank you. And hello, what is that existing AUM right now?
The iFast?
Yeah.
So currently, iFast has odd about 2,000 crore of AUM, and some 800 crore kind of or 1,000 crore of people has already asked for NOC, and residual amount probably now would be in the process of awaiting the approval from the existing ARN holders. You can say 1,000 crore is available for the transfer to Prudent. Current situation.
Okay. Thank you. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Yeah.
Hello, am I audible?
Yes.
Yeah.
Yes. Hi. So just a few questions from my side. First is, if you can give some color on the yields coming on in new flows from existing schemes versus the yields that are there on your book currently. So, for example, if if the yields on existing schemes of some of the AMCs are, let's say, whatever basis points, 80, 90 basis points, on the new flows, what will be the yields that you're getting? The second question, and more from a structural perspective, over a period of time, we are seeing that some of the larger distributors are becoming larger or their dominance is increasing. So to that extent, how does Prudent fit into the overall picture, and to how does the bargaining power of the distributor with respect to the manufacturer change over a period of time? And third, more of a data keeping question, you gave the mix of your insurance business between life and non-life. If you could also kind of break it down into the different product segments, more, it's not maybe number-wise, but maybe more from an understanding. And lastly, on the MF business, have you seen any change in the average duration of or tenure of customers holding a particular mutual fund before kind of churning? And is there any difference between different customer cohorts based on, new age customers or old age customers sort of out there? Those are my questions.
So if I talk about the first question, yield on the book and the yield on the new business. So as Sanjay has already said that let us understand the total yield or the average yield on the current book has got three components. One is the AUM prior to April 2019, where the yield on the book would be lower. So any asset what we mobilized till March 2019, the yield on the portfolio would be lower. the yield on the portfolio after April 2019 to June 2022, the portfolio yield definitely would be decent. Third component of our yield on the book is the Carvey's AUM. So Carvey's AUM is almost 20% of our AUM, and the yield on that particular book is very, very less compared to our yield on the book. So mix of all the three is given in the financials. So today, if you look at our yield on the new business and the yield on the AUM is almost the similar, because as we said, the bigger component of the three is the new business after 2019 to 2022, which is helping us to increase the yield. But at the same time, certain portion of pre-2019 and some portion of Carvey's asset is bringing down our yield on the book. But when you look at the weighted average yield on the current AUM and when you look at the weighted average yield on the new business, is almost the similar. Rather, the new business yield is little bit higher than the book in the current scenario. But that might not be the case after a few years, but currently the new book yield is higher than the average book. So that is the first question. Second, you are saying that the bigger guys are becoming bigger and bigger, and that is the trend which we are seeing. First, we said that more and more people are coming to the mutual fund industry. Second, even we would say that recently at MFI level, industry is going or doing the campaign to bring in more and more MFDs by a new initiative called MFD Kare Shuru. So that also is going to help the industry to get more distributors. And third, importance of platform amongst IFAs or MFDs is increasing. So that also will bring existing distributors to Prudent platform. And that kind of consolidation is obviously expected to happen over a period of time. And with volume, the bargaining power obviously comes. So that obviously has helped Prudent to increase the gross yield on the portfolio. Having said that, can we increase the yield because of the bargaining power over a period of time? I think industry is also at a peak level and we are also at a peak level. So we don't see a great amount of improvement in the bargaining power incrementally. Third question, what you asked about a mix between life and non-life. We would say that almost 2/3 revenue insurance business, we are only and only into the retail products. Life insurance, we talk about term and the endowment plans only. We don't sell ULIPs because which is not, rather I would say that similar products are available in the mutual fund. And on the general insurance side, we mostly, or I think major revenue comes from the health insurance, retail health insurance side. So this is the mix. Last point you asked about the average holding or the churning or the behavior of the investor. I would say that till 2019, or rather I would say that till recent period, the industry churn was little higher because the commission structures were higher first year, lower second year or third year. So obviously by nature, distributors were trying to churn the portfolio. Now we assume that it would be definitely in the advantage of the distributor also to continue the investment for a longer term. Even the clients are also not interested to churn the portfolio so frequently. So we believe that over a period of time, the churn in the industry will come down drastically. So, but we have not seen this in the recent phenomena. But in the medium to long term, our understanding is that the churn in the industry will come down. I hope we have addressed all your questions.
Sure. Thanks for all the clarifications. If I can just have one follow-up on my first question. Let's say today I'm an investor who invests in one of the existing schemes of an incumbent AMC. On this new flow, you will earn certain yields. So it can be 80, 90, 100 basis points. Now, how often are these yields renegotiated with the manufacturer on a going concern basis? And secondly, if I just look at the second portion of your yield, which is from April 2019 to let's say till March 31, 2022, if I compare that blended yield versus the yield on the equity assets that you're earning today, how would these two compare? So I think these are just the two follow-ups.
So you should look at this thing in two perspectives. First, you said that at what frequency we negotiate the rate with the AMC.
Yes. Yes.
So rate negotiation is never on the book. So rate negotiation always on the new business. So whatever we or AMC provide us on the new business today, again there is no negotiation or the discussion on that commission forever. So the rate negotiation doesn't happen regularly. Secondly, it is always a broader understanding between we and the AMC. So negotiation also doesn't happen so frequently. Third point, on the new business, the commissions are adjusted every month. So if the AMC's scheme size is increasing, let us say compared to last month, this month AUM is higher. So obviously on the new business, our commission would be lower. So by default, because it's a sharing on the TER, so obviously on the new business, the yield will come down. So to take it the same thing on the next question, what you asked, that what would be the blended yield after April 2019 to June 2022 and the current, as we said that current AUM yield is also adjusted on a monthly basis, because all the new business what we do with the AMCs, it at a new TER. So obviously it doesn't happen that way. It will change on the historical AUM as well. So, but yes, I think the weighted average yield on the business standalone Prudent, excluding Carby and excluding the pre-2019. So on that basis, you can say that the weighted average yield of the Prudent book only for the period April 2019 to June 2022 would be little higher compared to the new business yield in the month of July. So that is logical answer. But one should understand that Prudent is not in a B2C business. Prudent is in a B2B business. So any drop in my gross yield, obviously, proportionately, we also are able to pass it on to our distributors, and hence we are able to maintain our net yields.
Sure. Thank you for all the detailed clarifications and all the best.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Harshit Toshniwal from Bottoms Up Research. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, my question is regarding the distribution sharing with the sub-distributors. Now, wanted to understand that arrangement. So, for example, if a new person comes and he has a AUM base of say around 5 crore, 10 crore, then what would be our sharing be? So currently, I think if we get a 95 basis points, we pass around 56, 57% of the overall income with him. But as for example, is there a limit that if that AUM of the sub-distributor is more than 50 crore, then the sharing that AUM distributor increases, and what is peak sharing which we should assume? So if there is a 150 crore sub-distributor, what would be our sharing with him compared to say in that earlier scale?
Yeah. So the numbers what you are seeing right now, that 58, 59%, whatever you are referring, is the current sharing of the Prudent as a whole on the gross receipt and the gross payout basis. One should also understand that almost 10% of our AUM is B2C AUM. On that we don't pay anything. So obviously the sharing ratio, if you do the back end of the calculation, so obviously our sharing would be in the range of 67 to 68%, because the 60% or 58% what you are referring is on the total book of Prudent, and we only pay on the 90% of our AUM because 10% is a B2C business. So first of all that. Second is the sharing with a smaller guy and the sharing with the bigger guys definitely would be different. In our system, there are 10 different structures available based on the AUM. So the sharing would differ with the 0 crore AUM. The sharing would be different with the 5 crore, 10 crore, 50 crore, 100 crore, 200 crore. Definitely that would be different. Why it is helping us? Obviously, it is helping us to retain the distributor. It is helping us to remain competitive versus the industry. At the same time, one should also understand that on an ongoing basis, we recruit 5,000, 6,000 new distributors in our kitty. So when the new distributor comes to Prudent, his sharing is the least. So as we grow in the business, more and more people also join us at the lower sharing ratio also. And that also helps us to keep our sharing ratio under control, even if more and more distributors move to the higher area.
Right. So the reason I asked this is because I clearly understand that point. So there will be an influx of new AUM, which is the lower ticket size one, which will help. But say when I look at FY21, 22, 23, the Q1 part, so that number, and I am taking a total number because you don't have that split between D2C and the other way down, that number has increased from So it has been increasing by 100 basis points every year. So which is why just directionally, should we assume that at least that commission and fee expense line item, that sharing should gradually increase to a number around 60%?
No, sorry. I think you look at, basically, we do not publish the, let's say, the AUM between B2B and B2C. However, I can tell you the trend, B2B has been steadily growing in our system. If I look at the share of B2C before 4 years, it was almost about 22%. It has now came down to below 10%. So what Shirish is explaining is, overall sharing ratio has remained more or less steady in the range of 68 to 70% of whatever we repay to the B2B players. However, the sharing percentage is increasing because the B2C component is coming down. So I think
Got it. 67, 68 is common. Got it. And the second question, sir, I think, I mean, obviously it's not something which is going to happen nearby, but SEBI has regularly been trying to push the RIA model, and the way, I mean, the current form of business for most of the players is more into a gray area. It's RIA come advisory, RIA come distribution model. So what are your thoughts on this? I mean, how do you see this as a risk, if at all? And if you see, then how do you think that we are going to manage it if SEBI becomes more tight, if SEBI tightens this part of regulation?
So I think if you look at the thought process of SEBI and the MP initiative which Shirish has referred to, of increasing the distributors on the ground, I think the importance of distributors who is earning the commission from AMC is definitely not undermined by the regulator or nor by the MC. So probably distributors are going to exist, and probably that force is going to become more and more stronger. I think the RIAs, specifically fintech platform, has been doing significant quality job of bringing a lot of people to the industry. However, as you are aware that they are not playing a role of RIA, they are execution only platform, and hence SEBI has already came out with new consultation paper of terming all of them as a execution only player rather than RIA. So probably once that happens, you'll see these platforms are going to play a role only of an aggregator, wherein we believe that once somebody's AUM reach to a certain size, they'll definitely need an advisor. So bottom line is, role of advisor is something which is important in the mature market, like you talk about US or any other developed market. I think people realize the importance of distributors, and we believe that as more and more people join the industry, the distributor role will become more and more critical. So the point is, everything will coexist. SEBI is probably trying to make the role of current fintech platform more clearer by way of that consultation paper, but they do not want to force RIA on distribution.
Just one thing, I mean, I clearly understand that point. I'm just saying that for us, most of the individual distributors, officially they are not RIA, they all are distributors, but there is some or other form of advice which happen. Now, which is where I think I'm talking more specifically to a business like ours or an NJ, where we give some advice as to which mutual fund or which product is a better one, but still because of all the complications, we'll have to showcase ourselves as a distributor rather than RIA. That part is something I mean, over there, which is why I'm thinking that if we become very stringent that there will be a separate RIA and a separate distributor, then how would our sub-distributors work?
So if you look at the regulation, as a distributor, I am supposed to give incidental advice, and in the name of incidental advice, I am supposed to do the risk profiling. I am supposed to do the suitability of the product, and I need to accordingly advise, which is a requirement of me.
Right.
So the role of MFD and RIA is absolutely not different. Only thing which is different between MFD and RIA is MFD should earn commission from the manufacturers. RIA should not have anything which is inbuilt. He should only charge the customer. Otherwise, in the mutual fund distribution segment, I think the requirement of both of them are absolutely identical.
Got it. Okay. Sure. Thanks a lot, and congratulations, sir. All the best.
Thank you.
Thank you. Next question is from the line of Abhijit from Kotak Securities. Please go ahead.
Good evening, sir. I have just one question, a little bit of an extension to Harshit's question. Do you maintain like a focus list or a recommendation list for your plan?
So we provide the broad list, which is based on our internal parameters, that which scheme retail distributors should focus on based on various parameters. We have some 10 to 12 parameters. Based on that, we provide a broad list of 50, 60, 70 schemes. It's not like banking where the very small list of 3, 4 or 5 schemes will come, but there is a broad list of 50, 60 schemes which we provide. Yeah, but we do that.
And generally, let's say if I exclude the NFO related flows, what's the general share of overall flows that go into these recommended funds? And if there is any other list outside of it where you try to balance out, with, let's say, higher commissions, funds who are providing higher commissions?
So actually, if you look at, I think it's broadly, if I look at the broad number of schemes which we give as a recommendation, it's not a recommendation. We basically we give a list of focus list, which is almost over 50, 60 funds, and almost 70, 80, 90% of the business must be coming into that only. However, please understand, our role is to probably make our distributors significantly strong from the point of providing information, research, and whatever is required, which he can use for the purpose of advising to his customer. However, our advisors are free to choose the schemes on their own, because at the end of the day, I think they are the one who chooses who are advising the customer, and they are answerable for that as far as advice is concerned. Or selection of the scheme and that meant, yeah.
Got it. And sorry, just one more. Do you mind disclosing the share of, let's say, top 3 AMCs for us in the business?
So basically, it is in the line of the industry. So we being retail, we represent the industry. So obviously, I think top 5 or top 3 players in the industry is almost the same player and the same sharing in our industry. Of course, the ranking might be different. That number 1 player in the industry might be number 2, number 3 in my system. Vice versa, but yeah, I think we are representative of the industry only.
Okay, but you don't disclose the names of the AMCs, right?
No, we don't disclose. I think, but industry level, I think some data is available in which AMCs, which are the top 5 in terms of distributors. That kind of data is available. But yeah, of course, I think if we talk about our top 3 or top 5 AMCs, SBI, ICICI, all these AMCs are in top 3, 5.
Understood. Thanks a lot.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Manoj Chandra Agrawal, individual investor. Please go ahead.
Hi, good afternoon, sir. Are you able to hear me?
Sir, can you please speak a little louder?
Are you able to hear me now, sir?
Yes, slightly better.
Okay. And just give me a minute, I will just increase my voice a bit.
So not able to, unable to hear.
Are you able to hear me now proper?
Yeah.
Okay. So thanks for giving me the opportunity, sir. I have 2 questions. One is that we have shown like our pie chart for our revenue from the insurance and different like broking and mutual fund products. So do we or can you share type of pie chart for the profit related, like how much profit, percentage of the profit comes from the stock broking, and how much is from the insurance and how much from the mutual fund products? I just want to understand how much is contributing by the insurance product. In the revenue terms you have shared, but wanted to know about in terms of the profitability.
So actually, we are not doing the segment reporting. So the segment-wise profitability has not been provided, but I can tell you the revenue which is already provided by us in the consolidated numbers. So if you look at the out of 126 crore of this quarter's revenue, 112 crore came from mutual fund, 7 crore or almost 8 crore came from insurance, and about 4.2 crore came from broking, and 2.7 crore came from all other products. However, individual company-wise profitability is available. Probably the balance sheet would be. So the segment reporting has not been done, and so yeah, so sorry, I think that's the same thing I'm just trying to communicate, that segment reporting is not done separately for each and every vertical. what is published is only the segment-wise revenue. However, I can just tell you as far as all non-mutual funds. So if you look at from the point of setup, I think the insurance is a stockbroking is a standalone entity where we have the separate manpower, separate branch, separate offices. However, insurance is the business which is we have the significant overhead which is absorbed by the parent, and hence in case of insurance, whatever is our top line, more or less it goes to a bottom line other than the employee cost. But segment reporting is not there.
Okay, thanks. And the second question is about as you know, do we have any plan to become the AMC? Because our competitors are also doing the same way. Like initially they have been the distributor and then moving into the AMC. So do we have any plan to become the AMC? Because the distribution gives us a good opportunity to become the AMC as well.
So as of now, we don't want to do any backward integration. I think probably with more and more people entering the manufacturing space, we believe we want to remain independent as far as distribution is concerned. And we are the significant large retail independent distributor player now in the country, and probably we'll definitely feel that we'll take an advantage of that at the current juncture. So at least for the near future, we want to remain a pure distributor only.
Okay, thanks. That's all from my side.
Thank you. And now hand the conference over to the closing comments.
Thank you very much, everybody. I hope we could be able to address all the queries. If you have any questions, you can reach out to either Appearance or to Parth, and we'll be able to happily address your questions. Thank you very much for your time. Thank you.
Thank you very much. On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.